Hey there. Welcome back to Policy and Pathways. If you're a senior who's worked hard all your life and have savings or accounts in your home country, I need you to stop what you're doing and pay close attention. The IRS just rolled out major changes to foreign account reporting rules in 2026, and if you're not aware of them, you could be facing penalties up to $10,000 or more, even if you did nothing wrong. I know dealing with tax rules sounds overwhelming, but don't worry. I'm here to walk you through exactly what changed, who's affected, and most importantly, how you can protect yourself and your hard-earned money. Whether you have a bank account back home, own property abroad, or receive pension payments from another country, these new rules impact you directly. This isn't about scaring you. It's about keeping you informed and safe. Many seniors just like you have been caught off guard simply because they didn't know the rules changed. But after watching this video, you'll know exactly what steps to take to stay compliant and avoid those hefty penalties. So, if you find this helpful, please hit that like button. It helps us reach more people who need this information. Now, let me tell you why this matters so much. Right now, the IRS has always required U.S. citizens and residents to report foreign financial accounts. But here's the thing. Many seniors don't even realize they're supposed to do this. Maybe you moved to the United States decades ago and still have a savings account in your home country. Maybe your parents left you some money in a bank overseas. Or perhaps you're receiving a small pension from the country where you used to work. Whatever the situation, if the total value of all your foreign accounts combined exceeds $10,000 at any point during the year, the IRS wants to know about it. And with these 2026 updates, they're cracking down harder than ever before. Let me paint a picture for you. Imagine you're someone who came to America 30 or 40 years ago. You built a life here, raised your family, paid your taxes, and did everything by the book. But back in your home country, you still have an account with maybe $15,000 or $20,000. Money you've been saving for emergencies or planning to pass down to your grandchildren. You never thought much about it because it's just sitting there. You're not moving money around or trying to hide anything. But here's what you might not know. Every single year, you're required to file something called an FBAR, which stands for Foreign Bank Account Report. And if you don't file it, even if it's an honest mistake, the penalties can be absolutely devastating. Before these new changes, the IRS had some wiggle room when it came to penalties for people who simply didn't know about the reporting requirements. They could look at your situation and say, okay, this person wasn't trying to evade taxes. They just didn't know. But now with the 2026 updates, the rules have gotten much stricter. The IRS has clarified that ignorance is no longer a valid excuse, and they've increased the enforcement mechanisms to catch people who aren't reporting. They're working with banks all around the world through something called the Foreign Account Tax Compliance Act, or FATCA, which basically means banks in other countries are now required to report information about accounts held by U.S. persons directly to the IRS. So, even if you think nobody knows about your account, trust me, they do. The days of thinking your foreign bank account is private and separate from your U.S. tax obligations are long gone. The IRS has access to information from banks in over 100 countries now, and they're using sophisticated computer systems to match up data and find people who haven't been reporting. And when they find you, and they will find you if you're not compliant, the penalties are no joke. Let me break down what these penalties actually look like, because I want you to understand the seriousness of this. If the IRS determines that you willfully didn't report your foreign accounts, meaning they think you knew about the requirement and chose not to file, the penalty can be the greater of $100,000 or 50% of the account balance. Yes, you heard that right, 50%. So, if you have $40,000 in a foreign account and you don't report it, you could be penalized $20,000 or more. That's half of your savings gone, just like that. But even if the IRS decides your failure to report was non-willful, meaning you genuinely didn't know, the penalties under the new 2026 rules have gotten steeper. It used to be that non-willful violations carried a penalty of up to $10,000 per violation, but now they've increased it. And they've also clarified that each year you fail to file counts as a separate violation. So if you haven't reported your account for the past 5 years, you're not just looking at one $10,000 penalty. You could be facing penalties for each of those 5 years. The numbers add up fast, and before you know it, you're dealing with a financial nightmare that could have been easily avoided. Now, I know what some of you might be thinking. You might be saying to yourself, well, I'm retired. I'm living on a fixed income. I don't have a lot of money. Surely the IRS won't come after me. But here's the hard truth. The IRS doesn't care how much money you make or how old you are. If you're required to file and you don't, you're at risk. In fact, I've heard heartbreaking stories from seniors who were living modestly trying to make their retirement savings last, and then they got hit with these massive penalties because they didn't know they were supposed to report a foreign account. It's absolutely devastating, and it's something I don't want to see happen to you or anyone you care about. So, what exactly changed in 2026 that makes this even more important? Well, the IRS has updated the reporting thresholds and requirements in a few key ways. First, they've made it clear that the $10,000 threshold applies to the aggregate total of all your foreign accounts combined, and they're now requiring more detailed information about each account. You used to be able to file a relatively simple form, but now they want to know more about the type of account, who has signatory authority, what the maximum balance was during the year, and even information about any foreign trusts or entities you might be connected to. Second, they've shortened the deadlines and made the penalties for late filing more severe. The FBAR is now due on April 15th, the same day as your regular tax return, though you do get an automatic extension until October 15th if you need it. But here's the thing. If you miss that October deadline, even by one day, you're potentially looking at penalties. The IRS has made it clear that they're not going to be as lenient as they used to be about late filings, even if you're only reporting a small amount of money. Third, and this is really important, they've expanded the definition of what counts as a foreign financial account. It's not just bank accounts anymore. If you have any foreign investment accounts, foreign retirement accounts, certain types of foreign insurance policies with cash value, or even signing authority over someone else's foreign account, like if you're helping an elderly parent manage their finances overseas, all of that needs to be reported. A lot of seniors don't realize that just having your name on your mother's bank account back home, even if it's not your money, can create a reporting obligation for you. I've talked to so many people who are in this exact situation. Maybe you're helping out a family member overseas and they put your name on their account so you can help them pay bills or manage their money. You think you're just being a good son or daughter, but in the eyes of the IRS, that creates a reporting requirement for you. And if you don't report it, you could face penalties, even though the money isn't yours. Here's where Policy and Pathways comes in to help you navigate all of this. We've been covering these kinds of issues for years because we understand the unique challenges that immigrants and seniors face when dealing with U.S. tax and reporting requirements. A lot of this stuff is confusing, and the IRS doesn't always do a great job of explaining it in plain language. That's why we're here to break it down for you in a way that makes sense and gives you the information you need to protect yourself. Now, let me tell you about some of the most common mistakes people make so you can avoid them. The biggest mistake is simply not knowing that the reporting requirement exists. You'd be surprised how many people have lived in the United States for decades and have no idea they're supposed to report their foreign accounts. Maybe your tax preparer never asked you about foreign accounts. Or maybe you've been doing your own taxes and the forms never made it clear. Either way, not knowing doesn't protect you from penalties anymore, especially under these new 2026 rules. The second common mistake is thinking that because you already pay taxes on the income from your foreign accounts, you don't need to file the FBAR. But here's the thing. The FBAR is not a tax form. It's an information report. Yes, you do need to report any income you earn from your foreign accounts on your regular tax return, and you do need to pay tax on that income, but the FB is separate. It's filed directly with the Financial Crimes Enforcement Network, which is part of the Treasury Department, and its purpose is to help the government track money that might be involved in money laundering or terrorism financing. I know that sounds dramatic, and I know you're not doing anything illegal. But that's the reason the requirement exists, and it applies to everyone. No exceptions. The third mistake is waiting too long to get compliant. If you're sitting there right now realizing that you should have been filing FBARs for the past several years and you haven't been, please don't panic. But also, don't wait. The IRS has programs designed to help people who haven't been filing get caught up with reduced penalties or sometimes no penalties at all if you come forward voluntarily. But these programs work best when you go to the IRS before they come to you. If they find you first, you lose the opportunity to use these amnesty programs, and you're going to face the full penalties. One of the programs is called the Streamlined Filing Compliance Procedures, and it's specifically designed for people who didn't know they had a filing requirement. If you can certify that your failure to file was non-willful, you can file the last 3 years of tax returns and the last 6 years of FBARs. And in many cases, you won't face any penalties at all. But you have to do it right, and you have to do it before the IRS contacts you. That's why if you're in this situation, I strongly encourage you to talk to a tax professional who specializes in international tax issues. Don't try to handle this on your own because the forms are complicated, and if you make a mistake, it could cost you. Let me also talk about what happens if you have foreign accounts, but the total value never exceeds $10,000. Good news. If your combined foreign account balances never go over that $10,000 threshold at any point during the year, you don't have to file an FBAR. But be careful about how you calculate this. It's the maximum balance at any time during the year, not just the balance on December 31st. So if you had $12,000 in your account in March, but withdrew some money and only had $8,000 by the end of the year, you still have to file because you exceeded the threshold at some point. Also, remember that the threshold is based on the total of all your accounts combined. So, if you have 3 different accounts in 3 different countries and each one has $5,000, that's $15,000 total, which means you need to file. Don't make the mistake of thinking each account is evaluated separately. That's not how it works. Another thing that's changed in 2026 is the IRS's approach to currency conversion. When you're reporting the value of your foreign accounts, you have to convert the foreign currency to US dollars. The IRS now requires you to use the Treasury's official exchange rate on the last day of the calendar year, and they're being more strict about checking that you're using the correct rates. Make sure you're getting the conversion right, because errors here can cause problems. Now, I want to take a moment to talk about something that worries me, and that's the number of seniors who are being targeted by scams related to this issue. Unfortunately, whenever the IRS makes changes, or there's news about tax enforcement, scammers come out of the woodwork. You might get phone calls or emails from people claiming to be from the IRS telling you that you owe money immediately or that you're going to be arrested if you don't pay right away. Please, please, please know that this is not how the IRS operates. The IRS will never call you out of the blue demanding immediate payment. They'll never threaten to have you arrested, and they'll never ask you to pay with gift cards or wire transfers. If you get a call like this, hang up. It's a scam. If you're genuinely concerned about whether you owe money or need to file something, contact the IRS directly using the phone number on their official website. Or better yet, work with a licensed tax professional. Don't trust caller ID because scammers can fake that. Don't click on links and emails that claim to be from the IRS. Always verify independently, and when in doubt, ask for help from someone you trust. Before we wrap up, I want to make sure you know exactly what you need to do right now if this applies to you. If you have foreign accounts and you've been filing your FBARs every year, great. Keep doing that. But make sure you're aware of the new requirements under the 2026 rules. So, you're providing all the information the IRS needs. If you have foreign accounts and you haven't been filing, don't wait another day. Reach out to a tax professional who can help you get compliant through one of the IRS's amnesty programs before it's too late. And if you're not sure whether you have a filing requirement, ask. Talk to your tax preparer, call the IRS, or consult with someone who knows international tax law. It's better to ask the question and find out you don't need to file than to assume you don't need to file and end up with massive penalties down the road. I also want to encourage you to share this information with your friends and family, especially other seniors who might be in the same boat. So many people don't know about these requirements, and you could literally save someone you care about from losing thousands of dollars in penalties just by passing along this video. If this video has been helpful to you, please hit that like button right now. It really helps us reach more people who need this information, and it lets us know that we're providing value to you. The bottom line is this. The IRS is serious about foreign account reporting, and they're only getting more serious with each passing year. These 2026 changes are proof of that. But you don't have to be a victim of these new rules. With the right information and the right help, you can stay compliant, protect your savings, and have peace of mind knowing that you're doing everything you're supposed to do. That's what we're here for at Policy and Pathways, to give you the knowledge and tools you need to navigate these complex situations successfully.